Hello traders. The title of the video is how to play the mind game of Elliott wave trading like a pro. Let's get started. We are on the yearly charts of Chevron Corporation, a stock that belongs to the energy sector, a stock that belongs to the oil and gas sector. On a yearly chart, what can we see? We're going to start counting Elliott waves. So, as I explained to traders before, it's quite easy. It's often easier to count wave on the yearly chart. All right. So the higher time frame of 5 hours, okay, the easiest, okay, time frame to count Elliott waves. So this is my first Elliott wave, second Elliott wave. You can see that it's quite easy for me to label my waves on the yearly chart. And once I finish that, I want to make sure that I am not violating the Elliott wave principle, which means the fourth Elliott wave should not overlap the first wave. Here you can see it almost came into the range of the first wave, but it just stopped right there. So no violation of the Elliott wave principle at this point in time. And also we want to make sure that the third Elliott wave is not the shortest wave. So this is my third Elliott wave on the yearly chart. If I compare it to the first wave, it's quite taller than the first wave, and also so as long as it's taller than the first and the fifth wave, we know that okay, the third Elliott wave is not the shortest wave. So the third Elliott wave should be either longer than the first wave or the fifth wave. So here it is longer than the first wave, therefore the third Elliott wave is not the shortest wave. So my wave count on the yearly chart is quite easy. Even a child of 12 years old can do this, all right? So I'm going to put a bit of color into it to make it more interesting. Now, before we continue, I want to say to traders, our subscribers at 24 Elliott wave, that I like your interaction, like, dislike, comment. Very good. So a message for our subscribers at 24 Forex Trader. Come on, guys, wake up, do something. Give us thumbs up, give us thumbs down. Doesn't matter. All right, put some comment. Otherwise, you will not see more videos about forex trading at 24 Elliott waves. Okay, 24. Okay, forex trader YouTube channel is very important for me to know a little bit what traders are thinking. There were some comments at 24 Elliott wave that sometimes I repeat myself a bit too much. All right. I take into consideration all the comment, and as I explained to traders before, sometimes I do repeat myself purposely because of new traders. So if you want to teach okay 5 years old child how to count Elliott wave, you need to repeat yourself. So sometimes I repeat myself many times for those traders. So first time they are coming to the subject of Elliott wave, so they are wondering what is a multi-wave, what is a correction, what is this. So I go a little bit blah 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 blah. So for those who are advanced traders, so what you can do is can move the video forward, or if you think that George K is talking a bit too much, all right. So you may understand. So this is the reason why sometimes I do repeat myself, but I will try my best not to repeat myself, okay, too much. So I take into consideration your comment, and I will do my best, okay, to balance it a bit to please new traders and also advanced traders. So this is what we see on the yearly chart. So talking about the main topic today, how to play the mind game of Elliott wave trading like a pro. Okay, do we have a mind game in Elliott wave trading? Yes, we do. Why? Because you will notice that I often say that this is my wave count. So some traders say, George, this wave count is useless. George, you are lying, you are fooling people. So all I say to trader, this is my wave count. Okay, so the reason why I say that is because another trader may count their way differently. But as I explained to traders also before, is that the most important thing that we don't want to violate is what? The market pattern. If it's in a rising channel, then we want to make sure that we are not violating the Elliott wave principle as I've already done, because I don't want to repeat myself. All right, you see now? We want to make sure we are not violating the Elliott wave principle. And also, if it's a trending first, it will be in a rising channel or at least above a bullish trend line. Okay. But because not all traders count their wave the same way, even though some of them, their wave count may be completely wrong, which I see sometimes, you need to be aware of it. You may notice, all right, which we have seen for the dollar yen, very powerful market participants have counted their wave wrongly. And they can move the market in a different way, all right? And you'll be wondering, what are they looking at, these people? Are they drunk? Or are they using some illegal substance? But it's happening. So this is where the mind games come into Elliott wave trading. So once you count your wave, try to go into the mind of other traders, whether they are counting it correctly or incorrectly. Very important. So on a yearly chart, this is my wave count. Okay, what is your wave count? Try to count your wave on the yearly chart and let me know in the comment section whether yours is different than mine. Okay? All right. So going to the mind of other traders, playing the mind game of Elliott wave trader is very important to try to see if other traders will count in a different way. Sometimes you may not see it on the same time frame, but if you switch your time frame to, like I'm going now to the monthly chart, you may notice that other traders may be forced or maybe looking at it in a different way. But it doesn't mean that they are completely wrong, because some traders sometimes will send me emails. By the way, before I forget, like if you can send me, okay, a chart of Elliott wave, like the lady who sent me the chart last time, monthly chart, weekly chart, possibly yearly chart, and I can look at it and record a video with that chart. If you're a TSC trader, you know my Gmail, send them in, and I'll try to record a video, okay, accordingly, all right? Or if you count your wave and you are trading American stock and I have that charting data for that stock, all right, send the chart in. I'll look at it. If it's interesting, I may record a video, okay, for everybody else so we can all learn from it. So if you're a TSC trader, all right, contact me. And it may take some time, but just send them in and I'll look at it. If I like it, I will record a video so we can all learn from it. So now on the monthly chart, let's look at this chart. Going into the mind of other traders, playing the mind game of Elliott wave trading, you can see that some traders may say first wave, which is okay because the first, the third, and the fifth wave can be, okay, subdivided into 5 waves. So another trader may say, George, you are completely useless when it comes to Elliott wave. I'll say, all right, good. And he or she may say to me, George, can't you see clearly that this is the first Elliott wave, the blue one from here to here, and this is the second wave? And George, by the way, where do you learn your Elliott wave, okay, trading from? So I say, they will say first wave, second wave, third wave. I will say, George, are you blind? This is the fourth wave, all right? And this is the fifth wave. All right. So what we are doing now, we are trying to go into the mind of other traders, playing the mind game of Elliott wave trading. So for those traders, they may say first wave, second wave, third wave, follow my cursor, fourth wave, and the fifth wave. George, no violation of Elliott wave principle. The fifth wave has ended here, George, not here. And George, by the way, yourself, you said that, all right? Very often we apply Fibonacci extension to the fifth wave. George, as you can see, this move up is a flat correction that is developing. So he will say, those traders may say, a flat correction starting from here down, and then now this is the A part of the flat correction. Okay, this move down. So those traders may say this is the A part of the flat correction, and George, can't you see this is the B part of the flat correction, ending exactly at 138.2% Fibonacci extension level. Okay, you see the 138.2% Fibonacci extension level of the fifth wave of those traders ending here. So for those traders, they will say, okay, George, your wave count on the yearly chart is completely useless. Now we are expecting 1, 2, 3, 4, 5 waves down. A part of the correction, B part of the correction, expecting 1, 2, 3, 4, 5 wave down. Something like that. So for those traders, they will be looking at the structure of this move. You see here, came down 1, 2, 3. All right, so they may say, all right, George, 1, 2, 3 down. Okay, all right. So they may say, all right, probably, George, we are likely to see something like a running flat correction, probably coming down one more time, bouncing up a bit, and then coming down to the starting point somewhere here. You may say this wave count is wrong, but for those traders, this is what they see on the chart. So why do we care about those useless traders or those traders who think that they are, okay, their wave count is better than our wave count? We can now discount those traders because they are also market participants and they can mess up our trade. So the reason why we do care about those type of traders, the reason why it is important to play the mind game of Elliott wave trading is to avoid losing. Is to anticipate also the reaction of other traders. Because we are not alone in the financial market, we need to know what other traders are thinking. Remember, if that trader that is counting his wave like this 1, 2, 3, 4, 5 is working working for one of the big financial institutions, and he has a lot of liquidity at his disposal, he can move the direction, he can move the market big time. Therefore, it is important for us to go into the mind of those traders and understand exactly what they are thinking. All right. So now. So this is one example of going into the mind of other traders, try to see what they are thinking, and so they may say, okay, a flat correction, the B part of the flat correction has ended here, or they may say, okay, 1, 2, 3, 4, 5 is completed here, George. Okay, the correction has ended here, and a new trend will begin here. So we are doing that. We are now going to the mind of those traders. Okay. Another thing that as Elliott wave trader, because a lot of Elliott wave traders consider themselves as superior to other traders, to a certain degree they are right because they are interpreting the language of the price more accurately than many market participants. But do not underestimate the firing power, okay, of other traders. Why? Okay, why? Okay, because they can also move the market one way or another. Okay, the best when the market is efficient, we all 70% of the market participants will be doing almost the same thing, or will see almost the same thing. So going into the mind of other traders, we count the waves, okay, as they would have counted. Okay. Now the next step is to go also into the mind of traders that are not using the Elliott wave principle. All right. So one example of those type of traders are chartists, those who are looking at chart pattern. So another trader may say, George, I don't care about your Elliott wave analysis. All I can see on this chart is that we are having a head and shoulder chart pattern being formed. This is the head, this is the left hand side shoulder, this is the right hand side shoulder being formed here. Possibility that this stock will continue to go down near the neckline somewhere in this zone. All right. Because so there's a resistance here. The price breaks above. If it closes below that resistance, those traders may be thinking that, okay, we have a head and shoulder chart pattern, and they will be trying to sell it down. All right. So the reason why I'm recording this video today at the beginning of 2017 is that last year we have been posting a lot of video about Elliott wave trading, but now what we're going to do this year is how to become a better Elliott wave trader. How to avoid trading mistake, how to make a better Elliott wave trading decision. And one of the strategies that we can use is to go into the mind of other traders. So you remember we were talking also about preliminary wave count, your first wave count, boom, 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 like I did on the yearly chart. And then now, when we're going to go deeper, we'll go into the internal wave to see whether, in fact, is this an impulse wave or is it a corrective wave? All right. So if we label something like a impulse wave, but we look at internal wave, it looks like a 1, 2, 3. We will say, oh no, this is not okay an impulse wave. So this year we will be focusing about how to become a better Elliott wave trader. I will be talking also about the flat correction, explaining to traders how does the flat correction form, why we have that pattern, okay, 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. So you know that if I ask many of our subscribers what are the internal wave of a flat correction, they will be able to tell me, okay, at the end of a bullish trend or a downtrend, the flat correction is formed of 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. We have a running flat correction, we have an expanded flat correction, and we have a classic flat correction. All right, but now to understand or to become a better Elliott wave trader, one should be able to understand why we have 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. Same thing when we are talking now about the zigzag pattern, all right? So that we say the internal wave are 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5, okay? But now, when we ask the question, why we have that pattern? Why is it 1, 2, 3, 4, 5? Why is it 1, 2, 3, and 1, 2, 3, 4, 5? Few traders will be able to understand why. So this is what we're going to do this year. And the first step is to go into the mind of other traders, knowing that we are not alone in the market, though the Elliott wave is a powerful tool that will help us to forecast the financial market. We are not alone in the market. It is important not only to go into the mind of other Elliott wave traders, but also in the mind of other market participants, especially those technical traders that are using the chart alone, the chart patterns. All right. So we are talking about chart pattern, double top, double bottom, inverted head and shoulder chart pattern, round bottom, and so on. But also we are talking about Fibonacci pattern. So there are another group of traders that will say, Joe, this is a crab pattern. This is a butterfly pattern. This is a bat pattern, George. Are you blind? Can't you see that on the yearly chart that we have a bat pattern being formed? And so on and so on. So once you count your way, have it ready for yourself. But the next step, going to the mind of other traders, is there anything else other people are looking at that you have missed? Have they seen a bad pattern? Have they seen a Gartley pattern? Have they seen a double top? Have they seen, okay, a head and shoulder chart pattern? So with that, you are also prepared to make excellent trading decisions and avoid Elliott wave trading mistakes. I'm going to go back to my yearly chart one more time, and we're going to go a little bit deeper into my wave account. What's happening? So as I explained to you, I'm happy with my wave count on the yearly chart. First, second, all right, a third, fourth, and a fifth wave. Now, what is happening here for Chevron? All right, that's a very good question, because I know traders out there will be wondering, George, don't let me down, okay? Tell me everything. All right, I'll tell you, okay? Tell you now. So now we are here. Where are we? So after the fifth wave, we will expect what? A correction. So a correction. All right. We expect. So what kind of corrections are we having here? What's going on here? All right. What's going on? So the first thing that I will be recording another video when I will be talking about that in another video completely about the correction. One of the mistakes that traders are making, so we know the Elliott wave cycle, or you see on a 2-hour time frame, daily chart, monthly chart, and so on, and you see your beautiful, gorgeous zigzag pattern, all right, or any type of correction, all right, the 4 types of correction. Remember, the 4 types of correction. For essential type of correction, we have the zigzag, the flat, the triangle, and the combinations. Those are the 4 types of corrections, all right. Now, so whenever traders have identified a corrective wave, zigzag, flat, or anything else, the most popular corrective waves are zigzag, flat, and triangle. But one of the mistakes that traders are making is that they always expect a new trend as soon as the correction has finished. So I want to brainwash you a little bit. Get rid of that mindset once and for all. All right? Get rid of that mindset once and for all. When you see a zigzag or a flat correction or a triangle, those are ordinary corrective waves. Don't assume that definitely the next move definitely will be, okay, an impulse wave or a trend or a new cycle. From today, you don't want to think that way. So whenever you see a corrective wave, those simple corrective waves, don't assume that definitely the correction has ended. bringing us to the fourth type of corrective wave, which are the combination. If hold on please, I want to show you Intel. Okay, Intel Corporation. Yeah, here we are. Too many drawing on my chart. Now I'm going to I'll go to the monthly chart. You can see Intel was a bullish trend. You see it coming down, sharp correction. Okay, bounce, which this is what we call the dead cat bounce, which usually follow sharp correction, and then trade. So we have trending first, sharp correction, the bounce, and a move down, forming what we call the zigzag pattern. 1, 2, 3 down. Okay, so at this point in time, people will be thinking that a new cycle will begin for Intel. But where is the trend? None. So after a correction, you can have either a consolidation or a complex correction. And a correction can take a long time. Have I succeeded in brainwashing you today? All right? So something you need to understand. So when we are talking about a mind game, is that a lot of area of a trader go into robotic reaction, which means trending first, correction, new trend. No. Here it is. It did not happen, and then blah blah blah. Now it's looking like now we are breaking above the consolidation zone. And if this move, technically speaking, is looking like a new trend is going to begin for Intel, but it must be supported by the fundamentals. Okay, gaining more market share. Okay. And looking at the sector itself, the technology sector, that will determine whether we're going to have a new trend. And again, as I said before, the wave count one step at a time. One more example is Cisco. All right. Here it is again, trending fast. You see, sharp move down, one, and then pew down. Again, here again, people will be expecting a new trend or a new an impulse wave, and it did not happen. It's still now it's just piercing through the consolidation now. Okay, the resistance ahead is in the zone of $34.10. That's why it stopped now. All right. So the point I'm making, bringing me back to my original stock, Chevron, which is in fact a big a player in the oil and gas sector, right? CVS, an American stock. So in order to go into the mind of other traders, we don't want to react. You count your way, step back, all right? Step back. So as I said to you, the most stupid thing one can do is to underestimate your opponent. So you think I have the best tool, the powerful tool, therefore I will win. No. Wait, watch, know exactly what's going on, what kind of strategy these people may use. How can these people count their way? All right? And also, after a correction, what is likely to take place? We may see a consolidation, we may see a complex wave, or we may see straight away a new trend. If the sector itself is still bullish and the market sentiment is bullish. Am I repeating myself too much? Let me know in the comment section because I'm trying to improve that, okay? All right. Okay, so going back to my Elliott wave count. So first wave, second wave, third wave, fourth wave, fifth wave. I'm on a monthly chart. I want to check my corrective wave because I told you on the year HRD session now is the correction, what's happening. So we can see clearly the internal wave on the monthly chart. So 1, 2, 3, yes or no? So 3 move down, 1, 2, 3 after the fifth wave. So which pattern is coming to our mind straight away? The flat correction. But look at the internal wave here. Look, something strange is happening. This is again when the wave becomes a little bit complex. 1, 2. Let's continue to count it on the monthly chart, and you will see soon that sometimes traders get into trouble because of that. 4, and 5. That's where we are now. What's going on? What's going on here? So we see 1, 2, 3, and then we see 1, 2, 3, 4, 5, and then what's going on? Now, what's happening here is a complex correction. Feel free to disagree, and I will say to you, this is my webcam. Leave me alone. All right. Now, not that way, but okay, you understand. All right. Okay. So now I'm going to, which color should I use now? Blue? No, blue. Okay. I'll use orange. Okay. All right. So 1, 2, 3 after the fifth wave, orange. Here we are, 1, 2, 3. And now we have again, here it is. 1, 2, 3. All right. So 1, 2, 3, 1, 2, 3. This move down, this move down. I will call it X. Feel free to disagree with my waveform or put your comment in the comment section. Say, George, I don't know where you learn your Elliott wave from. Here it is. I call this one X. And my forecast is that this reform. So now we have again 1. By the way, the pink line here, this I need to mention to traders now, is the first long-term equilibrium price level for Chevron in 2017 is at 108.05. I will not repeat myself again. And the current short-term equilibrium price level for Chevron is at 113.63. The short-term equilibrium price level, 113.63, will remain in place up to the end of the first week of March. So here it bounced on it a bit. So if you are day trading, swing trading, remember 113.63 is the current short-term equilibrium price level that we must watch, okay, up to the end of the first week of March. The 108.05 will remain in place throughout 2017. All right. So my expectation is that we see 1, 2, 3. I call this one X. Now I'm expecting another 1, 2, 3 up somewhere, either stopping the next 1, 2, 3, either stopping at 13193. I will not repeat myself here, or applying Fibonacci extension to the fifth Elliott wave, or going all the way to, I'll draw another line there above the first one, or going all the way to 165.02. So 1, 2, 3, 1, 2, 3, X, expecting 1, 2, 3, either stopping at 13191 or pushing it all the way to 165.02. That remains to be seen. As we are talking about how to play the mind game of Elliott wave trading, we don't want to ignore other traders, those who are using the chart pattern, those who are using Fibonacci pattern, and those who are counting their wave in a different way. As always, when I count my wave, I say this is my wave count. The next step is to go into the mind of other traders, other market participants, okay, that are using, okay, chart pattern, Fibonacci pattern, and other trading tool. All right. So for Chevron, we need to understand that the price breaks above the long-term equilibrium price level is retesting it now. That's why we usually see in February we really find a support to push it to 13193, which is the first target. And if the market allows, in the long term, I mean, will it reach this level by the end of 2017? That remains to be seen. But there is a bit of problem for that I need to mention to traders. Looking at Chevron, I'm going to go back again to the yearly chart. All right. Now, as we are talking about how to play the mind game of Elliott wave trading like a pro, we want to use also what we call the trading triangle. The trading triangle is a powerful tool to go into the mind of other traders. And then you will see very soon, as I'm putting it here, traders that have been following us for many years, our faithful fan, know what I'm doing here. And we have the trading triangle. What we say is that if one is trading any stock or any financial instrument, one is trading first the market, which is the S&P 500. The next thing one is trading is the sector before trading in fact the financial instrument. So for instance, we want to trade Chevron, we will check first the S&P 500 and then we check the sector of the energy, the oil and gas energy, and ask ourselves what's going on. Looking at the S&P 500 is topping up, but the market sentiment is bullish. So what I say to traders at 24 Stock Trader YouTube channel about the S&P 500, there's a video there already, is that we are likely to see a triangle because the market is reaching the top, but the sentiment is still bullish. All right, so we need to know that when we are trading Chevron. Now, the next thing that we need to know is the sector. What's happening to the oil and gas sector? The energy sector is bottoming. Are we allowed to use that word on YouTube? All right. Is turning from bearish to bullish. Now, if you see that, okay, you need to check the fundamental. You need to go to Google Finance. You need to perform Google Asset Test. Any sector that is turning after going down for some time, if you notice that the market sentiment is improving relating to a bearish sector, you need to go to the fundamental. Very important. So going into the mind of other traders, we will also go into the mind of fundamental traders. Okay, so fundamental traders know that the crude oil market, the energy sector was bearish, and now the people are not very, very enthusiastic to sell crude oil as such. So going to the mind of fundamental traders, a lot of fundamental traders will try to buy, okay, undervalue, okay, crude oil stock, undervalue energy stocks. All right, but now that I count my wave and I'm looking at Chevron, I say, Chevron, you are not helping me very much, so to speak. All right, you are not helping me very much. I would prefer probably that you are somewhere a little bit lower than here, because if the sector is turning from bearish to bullish, all right, I would prefer stock that are undervalued, stock that are discounted, which means, okay, hold on please, which means we will apply Fibonacci retracement, this time Fibonacci retracement to the trend from the first wave to the fifth wave, and we will be highlighting which level. You know the story now, the 50% and the 61.8% Fibonacci, okay, okay, which color should I use now? Fibonacci retracement level of the prior trend, 50%, the 61.8%. So what I'm saying here is that the reason why I'm speaking to Chevron like this, all right? Now, I will prefer Chevron to be in the sweet spot zone. So some director may say, George, I will put you under surveillance. I will employ some private investigator to put you under surveillance because you are telling people to sell our stock. By the way, this video is for educational purposes only. It's neither solicitation nor offer to buy or sell Chevron. It's a technical analysis. Those who sell the stock will buy it again if it's undervalued. I'm not telling people to sell it. So normally, if the stock is turning from bearish to bullish and stocks are in the sweet spot zone or even at a cycle point, which I don't want to talk about here, for Chevron, it's quite a strong company. We will prefer Chevron to be somewhere near here, which means it's becoming cheaper to buy. So there is a bit of a problem here. We are at the top of the market. We are expecting a correction, but the sector, do you understand what I'm saying? It's very important because if you go about to buy crude oil stock, you need to pay attention to what? Talking about the inside of the trading triangle. We have the market leaders, the economy news, and the fundamentals. So now, this is one of the market leaders, okay, not as such, is the market leader, in fact, but it's one of the market leaders if you are talking about the oil and gas companies. All right? Now, here it is in a corrective phase, but the sector itself is turning from bearish to bullish. So what can we expect? So I'm bringing this out so you may start playing the mind game. That there's a bit of worry in the mind of technical traders that there are still other market. Let's look at ExxonMobil, by the way, very fast. Okay, a sector is turning from bearish to bullish, but there is a market leader like Chevron that is still in a look at this ExxonMobil. So something will click in my mind and say, well, so if things start getting worse for crude oil, we may see more downside. Looking at the market leaders, I would say, if I want to buy and hold those stock, I'll be a little bit careful because the market leaders are hanging up there unless they're going to push it up to form an expanded flat correction. Are you getting it now? Okay, so all this exercise that we are doing, after counting our way, we go into the mind of other area wave traders, we go into the mind of other market participants, chart pattern traders, all right, Fibonacci pattern traders, and also we use the trading triangle to go into the mind of fundamental trader looking at the sector, the market itself, the S&P 500 also hanging up there. What can we expect from the energy sector? What can we expect from this wave count? We cannot deny that we have seen 5 waves up, okay? Now, a correction is underway, but it looks to me, looking at the internal waves on the monthly chart, that a complex flat correction is developing here. But a warning to traders, the wave count is one step at a time. So don't be surprised if it's quickly coming down. You say, oh, your forecast is completely useless. All right? The wave count is one step at a time. We are not trying to go ahead of the price. That's my approach to avoid losing using the area wave principle. Do not go ahead of the price. You have your expectation. This is your wave count. Now you sit put and wait for the signal. All right? I will stop here. So if you have any question or suggestion, put in the comment section, and in due course, I will be recording another video, okay, to answer your specific question. I would like to invite traders, if you can send me a gorgeous chart like I did in the previous video below this one. What's the title of that video? About complex area wave. The lady sent me an area wave trader clarify a complex wave count. So the lady sent me the monthly chart, okay, and a weekly chart and a daily chart. So if you can do that and I can look at it and record a video, I will record a video. If I think it's interesting, you ask a good question, I will record a video to help everybody else. And I welcome those videos. If you are TST trader, send me the chart through my Gmail and I'll look at it. And in due course, I'll record another video, okay? If you are trading stock that I can see on the TC2000, you send me the chart, all right? And the epic, I will look at it and then I can record a video, because sometimes, okay, if you present something interesting, this is good for me, I can just record a video very fast for everybody else instead of okay, waiting a few days, okay? All right, so to summarize this video, the mind game of area wave trading consists of putting aside your preliminary wave count, your area wave count, and also understanding and comparing it to the wave count of others. That's the first step. All right, and also you want to go into the mind of other market participants, chartists, typical chartists, Fibonacci pattern traders, and also the fundamental traders. With that, you are able to make a better trading decision without cutting corners. So if you think that this is too much for you, remember that you want to know what is the current market pattern. All right. So the current market pattern is a bullish channel. You can see it's in a bullish channel. It's above a bullish trend line. So traders are expecting break above, retest, or pull back to retest the trend line as it did here. All right. This is the market pattern will determine the appropriate strategy that we should deploy. Okay. Happy trading to you all, and speak to you soon. We are the TSTW24 traders, talking about how to play the mind game of area wave trading like a pro.